Hey everyone, welcome back to the channel. Today I've got a real treat for anyone who loves hearing about big name stocks that keep pushing higher and higher. We're talking about Meta. Yep, the artist formerly known as Facebook. If you've been following Meta's story over the last couple of years, you know they've pivoted hard into AI. They've doubled down on their social apps, poured billions into some wild next gen hardware, and basically thrown everything at the wall to see what sticks. Now, I don't know about you, but when I see a company raking in billions from ads, playing around with advanced AI models, and maybe even launching products that could bring us into the post smartphone era, I get very excited. Oh, and if you're new here or just haven't done it yet, don't forget to smash that like button and subscribe. This channel is all about talking stocks in a plain, simple way. No complicated formulas or disclaimers that sound like they were written by four lawyers locked in a closet. We're keeping it straightforward, and I want you to be a part of the conversation. Seriously. If you have thoughts about Meta, or if you're bullish, bearish, or somewhere in between, let me know in the comments section below. Meta had a slam dunk year in 2024, and even leading into 2025, blowing past a lot of people's expectations on earnings and revenue. In fact, for Q4 2024, they pulled in about 48.4 billion in revenue. That's a 21% jump year over year. That is no small feat for a company that's already so massive. If I were to try to put this into everyday terms, that's like someone who was already living in a mansion, adding a whole extra wing to that mansion just because they can. They beat Wall Street's estimates for both profit per share and top line revenue, marking their eighth consecutive quarter of surpassing those pesky analyst expectations. Now, one of the biggest stories here is their ad business, right? It just keeps plugging along every time, regardless of all the talk about privacy changes, new regulations, or rival social platforms cropping up. Advertising is still raking in most of Meta's money, somewhere around 97% of their entire revenue. Think about that for a second. They're pulling in hundreds of billions of dollars a year, and nearly all of it is from ads. Their average price ad increased by around 14%. That's not a small thing, and it means advertisers are hungry enough to pay more. And that's exactly what you want to hear if you're a Meta investor. Now, you might be thinking, well, if Apple's privacy changes and Google's looming cookie phases out might hamper them, how are they still managing to post these big gains? The short version is AI. Meta's been rolling out better, smarter algorithms, stuff like Andromeda AI, which helps them do super targeted ads, boosting conversion rates by a nice margin and making advertisers more happy. Happy advertisers equal bigger ad budgets. Bigger ad budgets equal more cash rolling into Meta. Now let's talk about the elephant in the room like we do in every single video. Meta is shelling out an absolute absurd amount of money, over 60 billion, to expand its AI infrastructure and keep its lead in the space. They're developing Llama 4, which is their next gen model that's supposed to do advanced reasoning and handle different kinds of content. They're also investing in custom AI chips. They call them MTIA, Meta Training and Inference Accelerator. They don't want to be forever at the mercy of NVIDIA or other chip makers. Makes sense. Cut out the middleman. Keep more money and build a moat around their core tech. They're also building 2 gigawatt AI data centers, 20 times larger than your standard hyperscale data center. I can't even wrap my head around how big that is. Imagine a giant warehouse, multiply it by 20, fill it with advanced computers that generate enough heat to melt an iceberg, and you've got yourself some serious AI horsepower. It's clear the higher ups at Meta see AI as the golden ticket to their next wave of growth. Personally, I'm all about it, especially if it means they can keep fine tuning those ad algorithms and maybe roll out new features we haven't seen yet. The big question though is, all right, so you're spending all this money, but how do you actually make that money back? Right now, there's no straightforward subscription plan just for accessing Meta AI. There's no separate AI product that's raking in billions on top of their ad business. We're basically looking at intangible benefits that funnel back into their primary revenue driver, advertising. Of course, intangible or not, so far it's paying off because advertisers keep paying more. But from a typical investor perspective, you might wonder if they'll eventually do something like a premium AI subscription for businesses or advanced AI tools for marketing agencies. Who knows? For now, we at least see that the AI investments are helping them hold on to and even strengthen their massive ad empire. Let's not forget WhatsApp and Threads. WhatsApp recently hit 100 million users in the US. That's a big milestone because the platform is already king in a lot of international markets, but it used to lag stateside. Now that they're pushing deeper into commerce and business services on WhatsApp, The revenue is following over 60% growth. That's something to keep an eye out, especially if they start layering in AI-based features for businesses and customer engagement. Threads is another interesting piece of the puzzle. It's clocking in at 320 million monthly active users. For an app that started off as a quick Twitter competitor, that's not too shabby. Now, they are testing ads there as well, which means new revenue streams down the line. Nothing to break out the champagne over just yet, but you can't deny the potential. If that user base keeps growing, you're talking about a serious competitor in the short form or text-based social space. And guess what? More eyeballs to feed into Meta's existing ad machine. Ding, ding, ding. You may have heard about the Ray-Ban Meta AI glasses as well, right? I'll admit, when I first heard about them, I rolled my eyes a bit. I mean, the idea of camera glasses has been tried before, and it always felt a little gimmicky, right? But apparently these new AI-infused glasses have a shot at going mainstream. At least more mainstream than anything we've seen so far. Some early data does show that they're just not novelty. People actually like them. Now, are these glasses about to replace our smartphones? I don't think so. Probably not next week. But you never know what a few iterations of hardware and big AI leaps can do. Imagine if they ramp up to selling, let's say 5 to 10 million units in the next year or two. That might be enough to start a quiet revolution. Seriously, the shift from phones to wearable computing could mirror the shift from desktop to mobile a decade ago. Maybe. We all know how quickly that changed how we live. Meta manages to lead that transition. With these glasses, watch out. That's a brand new revenue stream, plus an entire ecosystem of potential. They could gather unique data, serve ads in your field of vision, though that might not be what you want, that would be creepy. Or even incorporate advanced AI assistants that talk to you in real time. If they pull that off and keep the public on board, it's game changing. Now, let's address the elephant's cousin in the room this time. Reality Labs. It's not the prettiest picture right now. The division lost $5 billion in Q4 alone and burned through a total of around $17.7 billion in 2024. It's no secret that VR headsets and the whole metaverse push hasn't exactly been flying off the shelves to your average Joe. Yeah, some folks love the Quest devices and hang out in Horizon, but it's nowhere near the mainstream adoption. That's just the reality of it. So why do I still think the broader story for Meta is positive? Because they don't actually need the metaverse to blow up tomorrow for the stock to stay hot. Their ad business is an absolute juggernaut, and their AI expansions are showing real results. Reality Labs is basically a moonshot bet, and personally, I'm not writing it off forever. VR and AR could eventually become huge, especially as they integrate with these AI glasses, or if they figure out how to make Horizon the next big social hangout. But for now, it's definitely a drag on the bottom line. If they can't find a path to making that profitable, or at least a less of a black hole, it might weigh on investor sentiment. Then again, they have so much money from ads, they can afford to keep throwing billions at it, for the time being at least. Now, regulatory and legal hurdles is where things get juicy. Meta is constantly on the radar of governments around the world. They've been slapped with a $1.2 billion fine under GDPR in Europe, and the Digital Markets Act is breathing down their necks with something about offering subscriptions for no ads. They've also had some run-ins with the FTC in the US, and there's talk about Apple's privacy moves costing them billions over the last year or two. The point is, regulations can shift at any moment, and if they do, Meta might have to adjust how it collects data or runs ads. That could dent the ad revenue. But let's be real, we've heard this story before, and yet they're still pulling in more and more money every quarter. They've shown they can adapt. They might pay some big fines, but as long as the user base is engaged and the advertisers keep coming, I don't see these legal challenges as a company killer, more like as a little speed bump. Now let's talk about the financials for a second. Let's get into some specifics that might make your eyes glaze over. But trust me, they're essential. Meta's finishing up 2024 with about $164.5 billion in revenue, a 22% jump from the previous year. Their net income is up 60% to $62.4 billion, and their operating cash flow stands at a jaw-dropping $91.3 billion. That is insane. In plain English, it means they are printing money. Operating margins are back up around 42%, an improvement from 35% the previous year. They also cut some SG&A expenses, partly by reducing legal costs. On the flip side, you've got CapEx that soared by 45% to nearly $39 billion. Yes, that's mostly those AI investments we mentioned, plus their debt to assets ratio jumped from 12 to 15%. They're clearly taking on leverage to finance these expansions. Am I worried? Not really, given how monstrous their cash flows are. To me, this says that they're confident enough in the future growth to invest heavily right now. As an investor, that's typically what you want to see. They also returned almost 30 billion to shareholders in the form of buybacks and dividends. So they're not just hoarding all that cash for themselves. They're giving plenty back to the folk who hold the stock. Now, about the valuation, the PE ratio sits around the high 20s, maybe 28 or 29, depending on the day. That's not dirt cheap. But for a company that's still posting 20% revenue growth and even faster growth in profits, that's what we call a growth at a reasonable price. It's definitely not in the stratosphere of some of the AI darlings looking at you, NVIDIA, but it's pricier than, say, Google. And in my opinion, it deserves that premium because we're looking at a huge business that keeps finding new ways to expand. Some folks are even tossing price targets in the $800 to $900 range. Hey, the stock was at 625 not too long ago, and it's creeping around 700 now at the time of making this video. Could it pop to 800 or 900? If they keep beating estimates, keep cranking out AI upgrades, and prove that these big investments pay off, absolutely. On the other hand, if the entire economy tanks or if they hit a major snag with regulators, maybe we see a pullback to 580 or so, but I'm not losing any sleep over a possibility. This is just the juggernaut right now. I'll be straight with you. I think Meta is a buy, a strong buy. In fact, I know some analysts are lukewarm, saying the stock is fairly valued or that the AI spending might weigh on profits for a few quarters. Personally, I see that AI spending as key to their next round of growth. We've all seen what generative AI did for a bunch of the other companies that latched onto the hype. And Meta is a unique position to embed AI into billions of user interaction across multiple platforms: Facebook, Instagram, WhatsApp, and now Threads. That synergy can't be replicated easily by smaller companies or even by some direct competitors. Plus, the success of these Ray-Ban AI glasses has got me thinking there's more to come. If they successfully lead us into the next shift of personal computing, that's a brand new horizon for them. Even if Reality Labs doesn't blow up right now, they've got time. Their main breadwinner, advertising, just keeps rolling. Sure, regulators will keep sniffing around, but at the end of the day, Meta has the resources to pivot and adapt. They've done it multiple times over the last decade, whether it was pivoting to mobile, shifting to stories when Snapchat threatened them, or adding Reels to combat TikTok. They've never caught completely flat-footed for too long. Let's also not forget about the global scale. Meta's user base is still growing, especially outside North America. They're pumping out new features in WhatsApp Business, which is seeing some serious revenue spikes. They're likely to keep monetizing Threads as well. That's a brand new ad inventory if you think about it. So every year they find ways to expand the top line. With AI, maybe they'll even figure out how to give us targeted ads that actually feel helpful. Hey, it's possible. Or new forms of ad placement we haven't considered yet. All these reasons have me feeling confident. If you ask me, ignoring Meta in your portfolio right now would be a mistake. Obviously, do your own thinking. Wait, scratch that. We're not even doing disclaimers. I'll just say personally, I'm all in on the idea that this stock still has room to run, and I don't see any major threat on the horizon that could fundamentally knock them out of their leadership position. Here's the bottom line. Meta is firing on all cylinders with robust ad revenue, a user base that dwarfs entire countries, high-level AI investments that are strengthening their core ad products, and new platforms like WhatsApp and Threads that are finding traction. Yes, they've got that baggage of Reality Labs losses, but with that kind of cash flow they're pulling in, they can afford to keep that project alive until the hardware truly goes mainstream. They also face regulators who might try to slow them down, but so far Meta has proven it can jump through those hoops and come out on top, and we won't be surprised if it happens again. This has been going on for a long time right now. So in my opinion, this is a stock that belongs in any growth-focused portfolio. I think it's going to go higher from here. If you're not holding it yet, I would consider getting in. And if you already own it, I wouldn't be in any rush to sell. If I had to give an actionable conclusion, buy the stock and hold it for the long haul. I see this as one of the best plays in the big tech, especially because of the strategic AI pivot that could pay dividends. And by dividends, I mean monstrous share price appreciation or actual future dividends for years to come. Now, I want to hear from you. Are you on board with Meta train? I want to hear from you. Are you on board the Meta train? Do you think all this AI spending is going to pay off? Or are you worried they might just, burn too much cash on these futuristic bets? Let me know in the comments, and don't forget to drop a like if you found this breakdown helpful, or if you just enjoy the stock talk that isn't bogged down by corporate jargon. If you haven't subscribed, come on, hit that sub up button and ring the bell so you don't miss any future videos. I'll be back soon with another breakdown, but until then, keep your eyes on Meta. This thing might just keep climbing and you don't want to be left saying, wow, I should have bought it at 700. Now it's at 900.